Canadian housing market showing some signs of life in May. Of course, in April, there was a near freeze up in activity. So while we saw a big jump off of those lows, what does it actually mean for the health of the big markets, Toronto and Vancouver? Joining us now, Steve Saretsky. He is a realtor working in Vancouver, author of the Saretsky Report. Always great to catch up with you. I mean, these are the kind of reports you can slice them any way you want. Either sales cratered year over year or sales soared month over month. But when you take a look at what's actually happening in the city of Vancouver, what's your feeling about the health of the market?
Yeah, I think that now especially is important to sort of have the boots on the ground perspective. So kind of being out there with clients, definitely a very mixed market. It's really all over the place. I think everyone is trying to figure it out. We have pockets that I would say are actually quite hot. You have entry-level single-family houses. Some of these are going multiple offers. There's been no price correction there whatsoever. And then you have the condo market, which, ironically was probably the hottest segment of the market before the virus hit. And now I would say it's the softest segment. We're seeing prices down, I would say on average about 5%, but perhaps a little bit higher in some areas at certain price points. So yeah, we're seeing most of the weakness right now is actually in the condo market.
All right, so the condo one fascinates me because I know there have been concerns that when it came to condos, I mean, it's a big part of the rental stock. And then in the past couple of years, people were worried that, okay, now you can't even rent a condo on a monthly basis. They're going to Airbnb. They're getting, short-term rental listings. And then that could be a big problem in the age of COVID-19 when we don't have tourists. Are you getting any sense that some condo investors are getting squeezed in this climate?
It's hard to say. I mean, you hear some of it anecdotally of it. I think that if you look at the data as well, you can see that, new listings dropped off for condos, but sales dropped off significantly more than the new listings did. Where on the detached side, it's actually been the reverse. As you saw new listings plummet by about 50% year over year, which is more than sales fell. So you can clearly see, I mean, there's probably some anecdotal reasons for that. I mean, I look at it and say, well, a lot of the people that own detached housing in Vancouver are typically older boomers, and they're not really inclined to sell their houses. They want people coming through during COVID, whereas the condo market, again, tends to be more investors. So if you have a vacancy that frees up, or if you're renting an Airbnb unit, it's much easier. You're much more inclined to put it on the market.
Now, Steve, we heard from the Bank of Canada today. They didn't do anything about their key rate. They've already slashed it down to what they call their lower bound, 0.25%. We get the real sense from the bank that money is going to stay cheap for a long time in this country as we try to recover from COVID-19. What's the interplay there? The money is cheap. The financing is cheap to buy a home. Are there other factors that could hold back the market this year?
Yeah, well, I mean, obviously, I think that the lower for longer is obviously going to be beneficial for housing over the long run. I think in the short run, what really matters for the direction of house prices is to see a real decline and a perhaps more sustained decline in house prices. Is we need inventory to rise. It can't get back to the old supply and demand. And right now, because of COVID, is you've had people that have been hesitant to list their properties for sale, at least in the detached side. So what I'm really curious about is what does the listing picture look like? We talked a lot about pent up demand. Nobody's talked about potential pent up supply. How long will these people hold out for? Again, maybe they hold out, maybe they don't really need to sell, but I think you have also people that need to sell, and I think a lot of that will depend on. Obviously, we have the mortgage deferral cliff, as CMHC likes to call it, in the fall, what that might look like. And then I think at the same time, we do have a lot of new construction completing over the next 12 to 24 months. It should be a record number of completions here in Vancouver. So I think the supply is going to come, at least in the condo side. And that's really going to be the story, is if you want to see a decline in prices or a sustained decline, we need inventory to rise.
Part of the puzzle, too, I know, and I have discussed this before, is immigration. The amount of new Canadians coming to this country every year. We were raising those targets. That was supportive of real estate. Obviously, we're on a bit of a hold pattern right now in terms of international travel and new Canadians coming here to make this country their home. Is that going to be another one of those downward pressures on the overall market?
Yeah, I mean, I think if you're looking at obviously the Canadian housing market, I think that everyone talks about population growth, and that's kind of been the story for at least part of the increase over the last number of years in home prices. And so I think that it seems kind of obvious that we should see a huge slowdown in population growth. I know that Ben Rabideau there of North Cove Advisors put out some excellent work on what he figures some of those figures look like, and I think it's realistic that with universities looking like it's going to be online courses here in the fall, for example, I think that's going to be a pretty big hit to the population immigration picture here in Vancouver.
I haven't had a chance to catch up with you since the CMHC made its forecast about the housing market, upset a lot of people in the real estate industry. I mean, the big headline there was this call from CMHC, from Evan Siddell, saying that average home prices could pull back anywhere from 9 to 18% over the next year. How do you feel about that forecast? Undershooting, overshooting?
That's a good question. I'm not. I kind of said this, been pretty vocal about it. I mean, obviously, I try to weigh the market and probabilities. I think the probabilities to the downside certainly outweigh the probabilities to the upside in terms of pricing. But I think at this point, with COVID and all these uncertainties, everything that we're seeing in the world, I find it I'm very skeptical about the ability to forecast home prices. But I think it does say something when your government agency that controls essentially the entire mortgage market comes out publicly with what I would say, at least for a government agency, is a pretty bearish outlook on the housing market. To me, that really tells me something, that these guys are obviously probably pretty concerned behind closed doors. And I think they probably have a better picture or a better read on what the mortgage balance sheets look like than any of us. So.
Yeah, and before I let you go, Steve, I want to ask you, even Evan Siddell floating the idea that maybe 5% down just isn't enough to protect young people. Seems like they want to make some changes.
Yeah, I think that, I feel realistically these changes obviously should have been implemented many years ago, when credit was much too loose and we had rapid price growth in, double-digit price growth in home prices. I think now when you go to, we're going into a downturn, into a recession, to then tighten credit, usually ends up making things worse. But I certainly understand where CMHC is coming from. I just think the timing is probably a little off.
Steve, it's always great to get your insight. Thanks for joining us.